So to further develop this morning's session, our next speaker will give us some insight into the business environment with which the UK hospitality industry operates. Please welcome the Senior Economic Advisor for PricewaterhouseCoopers, Andrew Sentance.
Well, good morning, ladies and gentlemen. It's a great pleasure to be invited to talk about the economic environment in which we're operating now. And I'm working on the basis that the slides will come up, which they are now doing. My talk is called Surviving and Thriving in the New Normal Economy. And perhaps looking at that title, you might react a bit and say, well, what is this guy talking about things being normal for? It doesn't feel very normal to me. And that's why I use the phrase, the new normal economy, because I think we have to make a very important distinction between where we are now and where we were before 2007 and the financial crisis. And the sort of trends that we're seeing in the economy and the drivers of growth are very different. And I'm not sure in the economic debate that we're having here in the UK that has been properly picked up. And in particular, I'm going to focus on the role of key parts of the services sector, including hospitality and tourism, in driving growth forward in this environment. So I want to talk about four main topics. The first one is just to give a sort of satellite view of how the economic recovery is progressing across the world. Secondly, to explain my idea about the new normal economy, what I really mean by that. Thirdly, to give you a snapshot of the UK and global economic outlook. And fourthly, to talk about the implications for hospitality and tourism. Now, if you follow the financial media in the UK and in a lot of the Western world, you perhaps don't get the correct impression about how the world economy is performing. The world economy is in the middle of quite a strong expansion phase. If we look at the turn of the century, the world economy was worth just over $30 trillion. By the time of the financial crisis, it had almost doubled in size. And since then, even though we've had a lot of economic turbulence, the world economy is now 20% bigger, expected to be 20% bigger this year than it was in 2008. And by 2017, and this is not my forecast, it's the IMF's projection, the world economy is expected to be 3 times the size that it was in 2000 in dollar terms. So it's not the fact that growth is not taking place, but that growth is taking place in areas of the world economy perhaps that we're not that accustomed to looking for it. We have a sort of view, I think, here in the West that the United States, Europe, the industrialized, developed economies are the drivers of growth in the world economy. In the 21st century, that's not the case. As you can see, the growth that we're getting in the recovery in the UK, European Union, what the international organizations call the advanced economies, or generally, is actually weaker than we've seen in previous recoveries when the world economy has been bouncing back from recession in the early 80s and early 90s. What is striking is the strong growth in the emerging and developing world. And at the heart of that is the emergence of the Asia-Pacific region and the large economies in that region, particularly China, India, Indonesia. And if you take the 10 most important economies in the Asia-Pacific region, which includes Japan and Australia, they are worth more already to the global economy than either the United States and the European Union. And the big picture for the 21st century in terms of the global economy is that the Asia-Pacific region and the large economies there are becoming and have already become, in many respects, the driver of growth in the world economy. So in the 20th century, we saw the United States as being the main engine of growth. In the 19th century, it was the European economies that appeared to be the main engine of growth as they industrialized. In the 21st century, it's the Asia-Pacific region. And if you take the broader Asia-Pacific region, I've just put on this slide the 10 most important economies, it's worth about 35% of world GDP. And the dynamism of that region can be seen in the growth performance. In the West, we've been struggling trying to achieve growth rates of 1 to 2%. In Asia, the average growth rate is somewhere around about 5% still. Even though we're seeing a cyclical slowdown in some of the economies like China, I think that's to some extent a temporary phenomenon, because these economies have the weight of population behind them. And as long as they don't mess up their economic development, they will continue to build their middle classes and to converge on the sort of living standards that we have in the West. And if you're in a region where 50 to 60% of the world's population live, depending on how you define the region, and that region continues to develop, that region will continue to move up towards a share over a period of time of close to 50% of world GDP. Now, here in the UK, we're in the slow lane of economic growth. That's not unique to the United Kingdom. Europe, the United States, all the major Western economies are not recovering to growth rates that they saw before the financial crisis, and I'll say a bit more about that in a minute. But it's important to see where the growth is actually coming from in the UK. The politicians and opinion formers have talked about the need for rebalancing in the UK economy. And certainly there is a need for rebalancing away from some of the sectors like the financial sector, which drove growth, and a rebalancing away from too much dependence on strong growth of consumer spending, which was a major feature of the growth that we saw in the 90s and the early 2000s. But though we have a very successful manufacturing base, it is comprised of high-tech businesses drawing on high skills, which are not about to spring into life and put down new facilities just because the value of the pound has gone down or because a government minister gets up and talks about the march of the makers and the resurgence of manufacturing. Manufacturers are very hard-headed. The manufacturing industry that has survived in the UK has survived because it's been able to weather quite difficult economic conditions over the last 2 or 3 decades. And even though we would wish it was larger, it's only worth just over about 10% of GDP. What is actually happening in the UK economy is it is the services sector that is driving recovery. And the services sector in aggregate, as you can see from this slide, has already exceeded the peak that we saw in 2008. And one of the beneficial effects of that is the services sector accounts for 80% of employment in the UK. That compares with 8% in manufacturing. And that's not to denigrate manufacturing, it's just to recognise the reality of where the weight of jobs are. So when the services sector is doing relatively well, that's helping to support employment, as Sir John has talked about in his presentation. But there are other aspects to the services sector that I don't think are well enough recognised in our current economic debate. And the one I just want to highlight here, having talked about the importance of growth in Asia and emerging markets and that continued expansion of the world economy, is the export potential, the ability of the services sector in the UK to tap into sources of demand overseas. Now, because we carry around in our heads a sort of economic model that is based on a sort of industrial world where exports are generated by sending stuff overseas and getting people to pay for them, it perhaps takes a bit of a mental leap to understand how the services sector contributes to exports. The services sector contributes to exports when people who live overseas and are generating their livelihood predominantly overseas pay for stuff that happens here in the UK and therefore generates economic growth here and generates jobs. And I work in a sector in PwC, which you can see highlighted at the top of the slide here, business and professional services, which actually tends to be lumped in with financial services. And whenever I give a presentation like this, I try and distance myself a bit from financial services, having never actually formally worked in the city, apart from being at the Bank of England in my career. Business and professional services are actually worth more to UK GDP than financial services. And businesses like PwC, the legal firms, people who supply professional services like organising big construction projects, etc. These are sectors which perhaps not widely recognised but actually contribute not only a lot to UK GDP, 13%, but also to our ability to tap into income overseas. Yes, the financial services sector is an important generator of overseas income, but also among the big three in the services sector here is tourism, culture and heritage. And our ability to attract visitors to the UK is a major source of overseas income. And then there are other sectors that are important: education, IT, communications and software, creative industries, and the whole business of building brands, which I think the UK has been relatively successful at in a number of different sectors of the economy. If you add up these sectors and their contribution to GDP in the UK, you get to nearly 50%, compared with that 10% share of GDP in manufacturing. So there is great potential in the services sector, in particular, including tourism, culture and heritage, to contribute to that rebalancing of the economy, to tap into sources of growth in these more dynamic parts of the world economy. Now let me move on to then explain what I see as happening in terms of this new normal world that we live in at the moment. We've had quite a serious recession in 2008-9, from which the economy is gradually recovering, but only slowly recovering. And when we have a recession and the economy recovers, there's a tendency to think of that in terms of a normal economic cycle, perhaps that lasts 5 to 10 years. It takes the economy 1 or 2 years to get back on track. And then we're back to the sort of growth trends that we had before. And that's actually what happened when we had the last recession in the early 1990s in the UK. The drivers of growth actually that re-emerged in the 1990s were ones that had been quite evident in the 1980s. We're in a different situation now. We've come to the end of a long expansion which dominated the Western economies for 20 to 25 years. And the conditions which supported that period of growth are not set to return. I put on this slide quickly, they may not return at all. And there's therefore a process of structural adjustment underway in the major Western economies. And this is not just a product of the financial crisis. It is a product of the fact that these drivers of growth have been eroded by the financial crisis and by the big rebalancing we're seeing in the world economy that I've talked about. And in fact, there are significant parallels between the last time we went into a period of disappointing growth and volatility, which was in the period from the early 70s to the early 80s. Now, obviously, there's some important differences between that period, but just to highlight a couple of important parallels between the 70s and early 80s and where we are now. One is we had a big shock to the financial system. In that case, it was the collapse of what was called the Bretton Woods exchange rate system, founded on the link of the dollar to gold, and it created a lot of volatility, financial volatility in the world economy. And secondly, we had big energy price shocks then, the OPEC price shocks. Now, we've had big energy price shocks recently, and they've been more driven by the strength of demand in the emerging world that I've talked about. But at the heart of those, the similarity between that period when the 50s and 60s growth wave came to an end and the ending of the growth wave that peaked around about 2007 is the fact that the drivers of growth over that long period have disappeared. And just in very simple terms, I see the drivers of growth that dominated the UK economy from the early 80s through to 2007. Strong tailwinds that supported growth, not just in the UK and other Western economies, in three main categories. One, it was a world of easy money, deregulated, liberalised financial sector. Two, it was a world of cheapening imports and cheap imports, which was initially ushered in by the oil price fall of the mid-80s, but then was reinforced by the fact that China and other low-cost producers came into the world economy and gave the West the benefit of consuming lots of cheap manufactured goods. And thirdly, it was a world where there was confidence that central banks and governments were in charge and could get the show on the road if growth weakened, and therefore the private sector and the financial sector could take confidence from that. And all these three ingredients, you can see, have been eroded, and therefore these three tailwinds which were carrying the UK and other Western economies forward have dissipated. And it's not therefore surprising we're in an era of relatively slow growth, and we're in an era where the businesses that succeeded relatively well in the couple of decades before 2007 are now struggling to find new momentum. And just to highlight that change in the international pricing environment, you can see in the 1990s, late 1990s and early 2000s, how cheapening global prices of goods helped Western consumers here in the UK, contributing to goods price deflation. Now that's been replaced by energy and commodity price shocks and food price shocks. And while we're in a sort of, we've reached a temporary lull in some of that energy and commodity price inflation, I'm not sure it's gone away. If China and other major economies in the emerging world start to pick up again, we may see another spike in the not too distant future. Now you may have come here thinking, well, we're going to hear from an economist, so that's going to be a pretty dismal experience. Not for nothing is economics known as the dismal science. So let me just move and say a couple more positive things about where we can find growth in the current environment. First of all, I don't believe this current phase of the new normal will last indefinitely. Just as in the 1980s, the Western economies moved from a period of turbulence into a period of strong growth, that can happen again. But we need to see big adjustments in the financial sector and in the public sector, I think, before that can happen. So I still see a transition to what I'm calling on this slide a new growth phase for Western economies as being a few years off yet. But even in the current climate, there are sources of growth that businesses can tap into, and I just highlight in this slide 5 areas. First of all, trying to tap into this strong growth in emerging markets. Secondly, exploiting innovation in new technology. Thirdly, responding to changing patterns of customer demand. Fourthly, having a flexible and adaptable business model that can adapt to the new economic climate that we're in. And finally, in a world where energy and commodity prices are likely to be relatively high and volatile, being efficient in the use of those energy and commodities. Now, an economist can't get up here without giving a few forecasts, so just a very quick snapshot of where we are in the world economy at the moment, presented in the form of a weather map. And we're seeing a considerable amount of dispersion in growth rates, not just in the world economy, where you can see the major emerging and developing economies are still, even though some of them slowed down, expected to considerably outperform the Western economies, but also within the Western economies. And actually, the UK, though we're very good at talking our economy down, is forecast to do relatively well this year compared with some of the other continental European economies, particularly in southern Europe. And the story, to my mind, in Europe is not so much of the Eurozone as a whole struggling, though some of the northern European economies like Germany have slowed down quite a bit this year, but one where the performance of the euro area is being dragged down by a very weak growth in southern Europe in particular. And I think we're seeing the emergence of what I would call a new Maginot Line in Europe, which stretches from the Low Countries down to the Eastern Mediterranean. And the northern and eastern European economies to the north and east of that line are going to perform much better than countries to the south and west of that line, including France, for some time. So let me just finish with a few implications for tourism and hospitality from this view that I've given. First of all, you're not exempt from this new normal world, that in traditional markets like the UK, we're likely to see slower growth. So that means we need to look externally, particularly to Asia and the emerging world, for sources of demand. And the Asia-Pacific region, not just more generally, is becoming a major source of inbound tourism. The tourism and hospitality sector has a key role to play in rebalancing the UK economy. If there's one big deficiency in the public debate that we're having about rebalancing the economy, it is that there's not enough recognition of the role of the services sector in doing that. It's also a key driver of employment. And what government can do is to make sure that we're developing the supportive infrastructure, education training systems, as Sir John talked about, and a tax and regulatory climate that supports the view that the UK is open for business, and not only can manufacturing industry do well, but the services sectors which generate the bulk of employment, and are also major exporting sectors, can also prosper here in the UK. Thank you very much.
Great. Thank you, Andrew. We have just 1 or 2 minutes for any burning questions from the audience. If there's any questions, we can take them now. I don't see any hands, so yeah, we've got a question over here.
Currency is short-term, long-term for the US dollar over the 3 years. That impacts.
Yeah. I mean, I felt for some time that the value of the pound has been perhaps not necessarily supporting the economy in quite the right way. Now, we need to have a relatively competitive currency, but we've seen the pound fall very significantly against the dollar and the euro. And I would expect perhaps as we move ahead for the next 2 or 3 years, we could see some appreciation in the value of the pound, as perhaps a better recognition of some of the strengths of the UK economy. And also as monetary policy begins to perhaps look to raising interest rates. So I'm not sure I would expect much further falls necessarily, because it has already fallen quite a long way.
Great, thanks, Andrew. We've got the new Chancellor of the Exchequer, Mark Carney, starting.
Well, Governor of the Bank of England.
Starting soon. If you were a Chancellor of the Exchequer, what would you do to encourage growth?
Right. Well, I think in terms of being the Chancellor, I think I put at the end of my slide there, 3 key things which government can do. One is by making sure we've got the infrastructure, and we do seem to be rather slow and diffident in developing infrastructure, particularly airport infrastructure. I see Willie sitting there. I'm sure he'll have something to say about it in a minute. Secondly, skills and education, as Sir John talked about. And thirdly, the overall tax and regulatory climate. We actually haven't had a radical tax reforming Chancellor since Nigel Lawson. There's a lot of unfinished business in the tax system. But we've also got a new guy, as you mentioned, Mark Carney, coming into the Bank of England. And I think the main challenge he's got is the weight of expectation on his shoulders. I'm not sure he is going to be the miracle worker that some of the people in the financial sector are suggesting. And perhaps he may face the challenge of having to try and move us out of this very low interest rate climate over the next 2 or 3 years. That's not being discussed very much at the moment, but that's something that we do have to face up to at some point.
Okay, great. All right, and one more question from anybody? Yep, over there.
What changes do you envisage in the banking structure moving forward?
Well, I think we're seeing an awful lot of change already. We've got a new regime coming in where banks have to ring-fence their investment banking operations. The whole regulation of banks is moving to the Bank of England. There's a lot of emphasis on encouraging the banks to build up stronger reserves of capital and liquidity. And I suppose, as I said in my presentation, I think even though hopefully as the economic recovery develops, there will be a degree of increased confidence about lending in the banking system. We have moved away from a world where money was too easy and too readily available in the 2000s. That contributed to the global credit boom and the financial crisis. So we do have to adjust in a number of respects to a world where money is less readily available than that, and we shouldn't expect to get back to the sorts of free and easy lending practices that we had in the mid-2000s.
Great. Well, please show your appreciation to Andrew Sentance. Thank you. Thank you, Andrew.